Welcome to The Explainer, where we break down the biggest stories. Okay, let's dive right in. A couple of huge developments are shaking up the financial world, and you're going to want to see how this all connects. So, let's start with this bombshell report that has everyone talking. Two pieces of news just dropped that, on the surface, seem completely unrelated. But trust me, when you put them together, they paint a fascinating picture of what could be next for the markets. All right, first up, Bloomberg is reporting that Kevin Hasset, a name with some really deep ties to the crypto industry, is now the front runner to lead the Federal Reserve. I mean, this would be a massive potential shift. And it's his background that makes this so significant. We're not talking about some academic who just dabbled in crypto theory. No, this guy was in the trenches. He was leading a White House working group on digital assets, he was advising a major exchange like Coinbase, and get this, he has some serious skin in the game with his own personal investments. And you know what? The market reacted instantly. These prediction markets, the platforms where people bet on future events, they immediately shot his odds of becoming the next Fed chair to over 50%. And that news alone was enough to trigger immediate moves in the bond market, as traders started pricing in a very different future for U.S. monetary policy. As if that wasn't a big enough deal, another major piece of news dropped on the very same day. This time, we're looking at the state of Texas, which just made a very public, very interesting move into the world of crypto. First, let's just put this into perspective, because the scale here is crucial. The Texas economy, it's absolutely colossal. We're talking about a $2.7 trillion GDP. If Texas were its own country, it'd be the 8th largest economy in the world, right up there with places like Canada or Australia. So when an economic giant like that makes a move, you better believe people pay attention. But here's the twist. Their initial investment into a BlackRock Bitcoin ETF is, by comparison, tiny, just $5 million. So what's the real story here? Right, the dollar amount here is almost irrelevant. It's laughable, sure, but what really matters is the symbolism. This is a powerful symbolic gesture. For a major state entity to officially add Bitcoin to its balance sheet, even a tiny amount is a massive first step. It basically signals to every other institution that this asset is being seriously considered at the highest levels of state finance. That small size just tells you they're treading carefully, probably waiting for clearer federal regulation. But the signal it sends to the market, it's enormous. So why did these two stories, the potential Fed chair and the Texas buy, have such a big impact on the same day? Well, it is all about the timing and the broader economic picture, which frankly has been looking pretty shaky lately. The U.S. economy is definitely flashing some serious warning signs. We've seen this wave of disappointing data roll in, and it's painting a picture of a real slowdown. I'm talking reports on everything from private sector employment and retail sales all the way to housing and manufacturing. They've all been pointing in the wrong direction. And this isn't just, abstract data. It's having real-world consequences. It's leading major institutions like Goldman Sachs to actually trim their growth forecasts because of this slowdown. So you take this combination, a potentially more crypto-friendly, rate-cutting Fed, plus a weakening economy, and you've got the perfect storm in the markets. It just triggered a very clear chain reaction. Here's exactly how it played out, like dominoes falling. First, that weak economic data hits. That increases bets that the Fed will have to become more dovish, which is just a fancy way of saying it'll have to cut interest rates to juice the economy. That expectation pushes bond yields down, which in turn sends a flood of money into other assets like stocks and crypto. And look at this. This was a major milestone. That top line is the 10-year Treasury yield, which is a key benchmark for the entire global economy. Seeing it break below that 4% level is a huge deal. It just shows you how strongly investors are now betting on those future rate cuts. Now, this rapid shift in expectations caused a very clear rotation in the stock market. You had distinct winners and losers for the day, as investors basically scrambled to reposition their portfolios for this new reality. Smaller, more domestically focused companies, they had a fantastic day. And the broader market, everything outside those tech giants, rallied hard. But meanwhile, those magnificent 7 big tech stocks, they actually lagged. And the US dollar got a lot weaker on the prospect of lower interest rates coming down the pike. And what about crypto itself? Well, we saw renewed confidence there too. Bitcoin ETFs saw a net positive inflow of $128 million. And Ethereum ETFs also had a really good day, continuing their streak of positive inflows with another $78 million coming in. So it all really comes down to this, right? With retail investors clearly jumping back into the market, the big question that analysts are asking is whether this momentum can actually last. Are we seeing a real, sustainable shift away from the big tech names that have dominated for so long? Or is this just a temporary frenzy? If you found this explainer helpful, be sure to smash that like button and subscribe so you don't miss your next daily edge. More news is in our Telegram channel, linked in the first comment. See you next time.